Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the first report of this year, 2017, and as usual we're going to start off with the changes in commercials positions, so here we go. As you can see, we've got the Chicago wheat on top of a list with a 21% change in commercials positions. We've got 17% change in large speculators. These changes are larger than average. But nothing too unusual. Of course, you can see on this 52 weeks time range that we do see similar changes quite often in this market. This is a bearish change signal that may affect prices in the near term. We may expect prices to go a little bit lower from here, but of course that's not for sure. We have to look at the 5 years chart and see how extreme this market is and what the longer term picture shows us. As you may see, we had the Chicago wheat decline for quite some time now, and as the market declined, you can see that stress levels have been built up in the market, and we can see that for quite some time, actually throughout 2016, we had commercials and large speculators at their bullish extreme levels. So we're not surprised to see somehow a bottom developing, and we may expect this to be a solid bottom. And if so, of course, then we can expect the major trend to change in this market. Moving on to the gasoline market, we have a 19% change over there in commercials positions. You can see the change size over here. It's definitely larger than average, and I would say that it is larger in the sense, for example, compared to wheat, where we had similar changes quite often, and we don't see that these changes that often happening in the gasoline market. This is a bearish change signal again. Opening a 5 years chart, we can see this the extreme in the market that, as you can see, is more leaning towards the bearish side of the market right now. Our next market is the S&P 500. We have a 19% change over there in commercials positions. You can see that for 2 weeks now, commercials have gone below the zero line and large speculators above the zero line. But a 5 years chart, here we go, would give you a more better picture about this market. We are going towards the bearish side again, towards bearish extreme levels. We're not there yet, so of course this means that maybe this isn't the top. Stress levels are definitely high in these indexes recently, but as you can see, we didn't really see any significant change in the major trend that is, of course, uptrend right now. Moving on to large speculators, COT Extreme, we've got the heating oil on top of a list with all-time COT Extreme in large speculators. All-time COT Extreme is visible also in commercials. So this, of course, is a bearish extreme. In the heating oil, you can see prices have gone higher. We had a significant bullish extreme back over here in the end of 2015. Came a little bit early. You can see prices got even lower from there, but eventually it took its effect, and we saw a rise in the heating oil. Now that prices have gone higher, we see that there was a significant drop in commercials positions down to net short of 75,000 contracts. In case of large speculators, they've gone above 50,000 contracts net long. So we have a significant extreme. Of course, you have to see other energy markets such as the crude oil, the gasoline market as well, natural gas, to see the correlation between these markets, and then, of course, decide whether you take this signal or not. S&P 400, all-time COT Extreme over there. Of course, this is a bearish COT Extreme. I just talked about this when we analyzed the S&P 500 COT chain signal, that there is a stress level in these markets. So I'm not surprised about that. Of course, this, as you can see, may be keeping its all-time COT Extreme level for quite some time, actually, maybe a couple of weeks, maybe even month before we see a top happening in these markets. And last but not least, the live cattle, where we have 107 report extreme in large speculators. Here we go. You can see it over here. So this was the last time, roughly 2 years ago, when we had an extreme this magnitude. Since then, prices have gone lower. They eventually bottomed out back over here in 2016, and then we saw prices going much higher. And since then, of course, the picture has changed also. This isn't an all-time extreme. You can see that all-time extreme levels would be around over here. So we've still got space left. This means that the rally may continue for quite some time. But nevertheless, it's a stress level that is significant. It's the third market on our list. And I think it's a market that we should have our eyes on. Don't forget, you can look at other COT charts on our COT charts page for free if you would like to have a more in-depth and detailed COT analysis. Of course, the service gives you the opportunity to do that. I hope you enjoyed this review, and I hope to see you next week. Have a great week. Take care. Goodbye.